Can TCS deliver an early Diwali bonus for the IT sector? That's the key question, isn't it? Expected to post a flat Q2. Jasmeet first Johnson to give us a quick preview of what is expected from Q2 earnings. Over to you, Jasmeet.
Well, right, yes, thank you for that. Now let's look at the revenue expectations from the Q2 results for TCS. While the revenue is expected to rise by 2.7% and be reported at 65,000 odd crores. When it comes to the EBIT is again expected to rise by 3% at 16,000 odd crores. While on the other hand, margins are expected to see a flattish growth this quarter and see a slight uptick by 9 BPS points. When it comes to net profit, it expected to take a fall of 1% and be reported at 12,570 odd crores. Well, this is what is expected by the streets, the numbers for TCS. Now, if you look at the key other details to watch out for, if you look at the deal win, Morgan Stanley is penciling in a TCV between 9 to 10 billion for this particular quarter. On the other hand, which is Jefferies, where they expect a deal win to be in the range of 7 to 9 billion. But if you look at the Q1 deal win of the company reported a deal win of 9.4 billion back in Q1. Now, in terms of the margin trend, if you look at the trend, the TCS has been in the range of 23 to 25 odd percentage in the past 7 to 8 quarters. While given this quarter might have a muted margin growth, that's something to watch out for how the margin turns out for the Q2 of FY26. Now, other key things to watch out for and that investors will be eyeing on would be the CC growth in terms of the Q2, while the brokerages are penciling in a growth between 0.1 to 0.04% when it comes to the CC growth for the revenue. On the other hand, if you look at the other deals to watch out would be the BSNL incremental business update. That's something to watch out for. And also the update on manufacturing segment. Given the slowdown in the auto industry, that's some commentary we'll be looking at. While the other aspect will be the implication of the JLR cyber attack, what the company comments on that, and also to understand the overall hiring trend going forward, and also to get the comments on the H1B visa outlook, as well as the AI trend that the company is penciling in for FY26.
Well, let's see what it delivers, but what is expected and what could be the disappointments, if any? Piyush Pandey, telecom analyst and tracks IT as well very closely, Centrum Broking. Johnson right now on the show. Piyush, thank you so much for joining in. And apologies if I got that wrong by saying just a telecom analyst. I know you track IT too. Would love to know what is it that you are watching out for the most when it comes to TCS? Is it the numbers delivery or the margin trajectory that they deliver, or is it more about what they say about H2?
What matters now is more about their outlook for H2 and maybe for the next year. In terms of deal TCV, the reported deal TCV would be key thing to watch out for. And more importantly, in terms of demand for verticals like say BFSI tech. So what we are hearing is that there is stress in verticals like auto, manufacturing, retail, and also like say with this Accenture guidance for FY26, now it looks like H2 would also be somewhat muted, and now story primarily shifts toward FY27.
Got it. Okay. Now, Piyush, we know that Q3 is typically marred by one-offs, furloughs, etc., and stuff like that. Would it be a big disappointment if any indication around a soft Q3 comes in with hope expressed for Q4, which is when I believe the bulk of the spending decisions at the US side at least, or maybe the global side, will get taken? So if they kind of softly talk towards a skittish Q3, but a possibility of a strong Q4, is that a good enough development in such a scenario, or would you want more?
Now it looks like Q3 would mostly be muted because of furloughs and other lesser number of working days. And also in Q4 also like you have less number of days because of February. But I think any colors or like say any colors or demand for this next year would be what the analyst and investor will be looking for like. So now it looks like our next 3 to 4 months not much expected from this IT services. But having said that, now the valuations look extremely comfortable. At the current valuations, if somebody wants to add for like say period of 2 to 3 years, then it looks good.
Piyush, the thing with TCS is, and of course TCS still about flat today, but after the recovery yesterday, flat ahead of its results, that if there is any streak of positive news it might be taken very well by the street. I mean, that's the theory. What do you think about that, first of all? And what is going to be the key indicator you look at? Is the deal pipeline becoming a very, very important factor? Are you concerned? Are you going to wait to hear what they're saying about hiring, because they've been in the news for that, H-1B visas? What is going to be that X factor point that you need to see when you hear the management's commentary?
Yeah, I would say the X factor would be the number of deals or some amount of numbers they are doing for this AI-related deals. Like, so you might have noticed that Accenture is now giving this the amount of deals they're doing for this generative AI stuff, and this number, if TCS starts reporting or the percentage increase in number of those type of deals, that will be positively taken like by the street. Like, and plus any colors or like say other verticals, like say any green sourcing vertical, like say healthcare or other verticals, that would be positively taken. So I would say for the current quarter, it's mostly, I would say, are not much expectation, but any colors on guidance for the coming next 2 quarters, and in terms of type of deals they're getting, any improvement in discretionary tech spending would be like say something to watch out for.